fascinating to see whether the commodities bubble has indeed burst or whether it's simply a correction, albeit a very deep one, in the midst of an ongoing bull market. And there's all kinds of commentators on each side of the financial spectrum that would answer that a different way. I think if you look at price movements in commodities over the last sort of year to year and a half, it's impossible to argue that there isn't a real serious degree of speculation involved in it, because supply and demand equations simply don't justify oil moving from sort of 75 or 80 bucks a barrel up to 145, back down to 90, and to sitting just over 100 where we are today. So I think it's a very different market than you would think about from a typical commodity bull standpoint, and it needs to be evaluated as such. Only time is going to tell whether it's actually a pricking of the bubble, if you will, but I think that the commodity price increase or price advance had gotten very, very much ahead of itself. I think the real increase in commodities and the fear of inflation hasn't come solely from oil at all, but from other related commodities like corn, like wheat, like soybeans, like precious metals to an extent, that get caught up in the speculative fervor, if you will. What's happened over the last year, a couple of years, is that a number of commodity-based funds have been put together, and they haven't traded solely in oil because of the liquidity issues and whatnot, but rather have gone out into a number of different commodity areas. So where the desire for commodity exposure sort of begins and begins with oil, and certainly people talk about oil probably more prominently than any other, oil doesn't really drive those other commodities at this point. To me, it's more the financial, the desire for people to have exposure to commodities as an asset class, spurred on by oil and the oil story. I think any conscientious investor at this point would look very, very closely at their degree of concentration to commodities, and it's a consistent theme. You should always look at the degree of concentration you have to any particular sector, be it industrial or geographic, in your portfolio. But especially with the volatility that's been exhibited in commodities over the last couple of years, I think it's really important that the prudent investor understands what role he or she expects commodities to play in their portfolio, and that they are very, very careful that they don't end up betting the farm on commodities simply because of what can happen. I think you'd find it very difficult to argue that any of the recent, or much of the recent price increases in oil, for example, have been driven by actual demand. Actual demand has not increased anywhere near enough over the last 5 or 6 years to justify the 5 or 6-fold increase in price that we've had since 2001. So it's very difficult to argue that the money that's been made in commodities is a result of anything other than speculation in the short run, and that just means that people need to be very, very aware of what can happen if everybody decides that they don't want that exposure anymore.